Really, just recap this recent developments here. So BOJ hikes. The market was having some freak out moment. And of course, it was a fundamental, technical, lots of debate going on around there. But this kind of GDP print, that can definitely warrant more hikes down the road.
Yes, certainly. So if you read the summary of opinions of the bank's July meeting, the main concern around the economy was the prolonged weakness in consumer spending. And the strength this morning clearly suggests that those fears should now be allayed. Admittedly, some of that strength was because of a strong rebound in durable consumption, which reflected the disruption at major car makers. So there was a big fall in vehicle registrations in the first quarter, which was always likely to be temporary. But other durable goods and non-durable goods consumption also edged up. And real wages are now finally growing again on the national accounts data. So nominal labor income is growing very strongly, and real incomes are now also starting to grow again. So all this suggests that the economy is recovering in earnest, and that points to another rate hike later this year by the Bank of Japan.
When, though, I'm wondering, in your view, given, of course, we've seen the market turbulence in the previous week, and also we do have that September leadership race next month as well?
Well, we've penciled in a rate hike at the bank's October meeting, which is when they next update their forecasts. Obviously, the Deputy Governor Uchida recently sounded a bit cautious about hiking again, but that was shortly after that turbulence, and now equity markets are rebounding. The yen has stabilized. It's actually not much stronger than it was when the bank hiked rates a couple of weeks ago. We were just 1 or 2% stronger, so it doesn't affect the outlook for inflation very much. So we still think there's a strong case for another rate hike 2 months down the line.
And where do you think dollar yen will go if we do get, hypothetically, an October hike by the BOJ? And of course, we start seeing the Fed cutting in September. And also, what does that mean for a lot of those manufacturing export-driven companies?
Well, we do expect the yen to end the year just a touch stronger than it is now, but we expect it to strengthen in earnest over the next couple of years. And I'd say the risks are tilted towards the yen strengthening a bit more rapidly than we're anticipating. Now, the big influence on firms from that is not so much through export volumes, which haven't gone anywhere over the last couple of years. Japan hasn't been able to gain any global export market share. The main channel is through the earnings. So most exports are invoiced in foreign currency. So weaker yen basically pushes up the export earnings, and also, more importantly, the earnings on overseas subsidiaries, which are now quite a bit higher than export earnings. So a stronger yen does weigh on corporate profits, and at the margin will make firms a bit less willing to hike wages. But given that inflation is still quite high, there's probably going to be a reasonably large pay hike again in the next year's spring wage negotiations.